Assalamualaikum warahmatullahi wabarakatuh, and salam sejahtera. Thank you for the organizer, uh, and thank you for the audience, all the audience. So I'm Dr. Norshafizah Hanafi. Presentation of the topic capital structure and firm performance and analysis of consumer products. So I'm from Universiti Utara, Malaysia, Kuala Lumpur, and this study members also contribute from Tan Chin Sang, Dr. Bidayatul Akmal, and Fazilah binti Osman. Okay, so this study is established to determine the relationship between capital structures and firm performance by using two different models, using either financial dimension or non-financial dimensions. So according to the Santos Brito 2012, under the first model, they considered and grouped three aspects as a financial performance measurement, which is a profitability, growth, and market value. Under the second model, they use 6 measurement of profitability, which is a return on assets, ROA, EBITDA margin, return on investment, ROI, return on sales, return on equity, ROE, and economic value added. So the indicator of growth aspect they use were market share growth, assets growth, revenue growth, and net profit growth. So the study measurement of market value aspect used were EPS, stock price improvement, dividend yield, stock price volatility, market value added, and Tobin Q. So the firm performance measured by current study is only emphasized on the financial performance. A firm with a good financial performance is mostly easier to obtain funding than an unprofitable firm due to profitable firm able to maximize investors' wealth and minimize lenders' credit risk. So this study is focused on the consumer product industry in Malaysia. So in Malaysia, consumer product industry is the largest contributor to the GDP, the gross domestic product. So it is evidence support by the result published by Department of Statistics Malaysia that show 53.7% share of consumer product industry to GDP in fourth quarter 2017. So Malaysia GDP is strongly affected by consumer product industry. So the main contributor of GDP from consumer product industry are foods and non-alcoholic beverage, communication, housing, and utilities. So Malaysian company grown 7% in the year 2017. Consumer product firms are challenged by the business environmental changes in the last 3 years. So another challenge was the depreciating Malaysia ringgit in international trading, which at one time reached the highest exchange rate, ringgit Malaysia 4 ringgit and 49 cents in December 2016. A significant change was observed in Malaysian inflation rate in 2017 when it grows to 3.7% due to weak ringgit and rise in fuel prices. So in this study, we use three theory. So the theory number one is pecking order theory. Is an alternative theory of trade-off theory and was developed by Donaldson 1961 and popularized by Mayer and Majlouf 1984. So this theory demonstrated that internal financing is a prior choice for company raise the capital structure which retain earnings and access liquid asset. So for theory number 2 is signaling theory was developed by Ross 1977. This theory stated that managers possess more internal information than investor, and they send internal information to investor by using a financial policy. So this signal lets investor to believe that company will possess an enormous free cash flow in the future to pay off the interest and principal of debts, according to the Marco Polo and Papadopoulo 2009. So, in the other hand, the overestimate firm would not invest the project by applying debt financing due to the company bankruptcy risk will increase. So the theory number 3 is the agency theory. So according to the agency theory, manager improve company efficiency and effectiveness due to return rate of profit over interest rate of debt financing. So Malaysia reduced their consumption after GST has been implemented by Malaysia government. So this evidence is supported by the managing director Dato' Ng Ying Peng from Tome Consolidated Berhad Group, who share to the Star Online that retail market performance had been declined 10% to 30% compared to year 2014. Study by Wong 2015. So firm performance measurement should be included with other stakeholders' rights such as customer satisfactions, employees' happiness, environmental concern, public concern, and etc. So although this is a tough to assess, but this is important for a company to know if it is efficient or inefficient. Okay, so moreover, literature review show a mixed response with conflicting results. Some study either negative or positive relation between firm performance. Therefore, indicators of firm performance are difficult for researchers to measure. So there is a negative impact on the position of Malaysia ringgit and on consumer product industry, according to Zaino 2016. This study is expected to be beneficial for consumer product firm to strengthen their capital structure to meet the challenges faced by the business environment changes. Okay, we have three research objectives. The objective number 1 is to analyze a relationship between debt financing and firm performance. Objective number 2, to analyze a relationship between equity financing and firm performance. Objective number 3 is to analyze a relationship between liquidity and firm performance. So the question of this study is number 1, is there a significant relationship between debt financing and firm performance? And number 2, is there a significant relationship between equity financing and firm performance? And number 3, is there a significant relationship between liquidity and firm performance? So contribution to this study contribute to the firm managers, and this study helpful in structuring an optimal capital structure or conduct a greatest capital structure, specifically in consumer product industry. From a theoretical view, the company might achieve the maximum profit as company reach an optimal capital structure, but with the present study, managers will choose a valuable financing tools to finance their project or implement their strategies. So this study can support investors and lenders too. Investors include capital structure factors during investment decision making, and investors use the capital structure analysis to select the company or sectors for investment that enables them to maximize their return. And for the lenders identify the riskier company and profitable company based on capital structure analysis. Lender may avoid investing their fund into the riskier company or minimize their risky. So lastly, this study is useful for government to set appropriate fiscal and monetary policies in order to develop this industry. Besides that, government-linked company may determine a good proportion of debt financings and equity financings to expand their business. Okay, this study focus on the impact of capital structure on consumer product and firm performance. So current study use capital structure, which is debt and equity, and other organizational factors is liquidity as an independent variable. For the external factors have not been emphasized in this study, such as income tax, inflation, currency exchange, GDP, and consumer product index. Furthermore, they have two models employed in this study. There are ordinary least square regression (OLS) and fixed effects models. So this is the theoretical framework. We have independent variable and dependent variable. So independent variable is capital structure, which is measured by the total debt to total asset TD, total equity to the total asset TE, and also we have liquidity as others organizational factors. And for the dependent variable is firm performance, and firm performance measured by the return on asset ROA, return on equity ROE, Tobin Q, TQ, and price earning ratio, which is PE. So the methodology for this study as an exploratory research to look for possible factors affecting firm performance or determinant of firm profitability. So quantitative method of analysis is applied to investigate the relationship between capital structure and firm performance. So the secondary data was used in the current study collected from Bursa Malaysia to examine the correlation between leverage structure and corporate performance from year 2013 to year 2017. So the consumer product industry is the target population of this investigation, and 200 public listed consumer product companies available on Bursa Malaysia webpage refer to the Bursa Malaysia 2018 are used. And to select the firm, simple random sampling is employed to pick 120 public listed company from consumer product industry. Okay, capital structure is an independent variable for this study. It's measured by TD and TE, and other organizational factors that may affect the firm profitability also employed by this study to test their relationship, which is liquidity. And at the same time, firm performance is a dependent variable for this study. It is measured by ROA, ROE, PE, and TQ. So the ROA and ROE represent as accounting performance, while TQ and PE represent as a market performance. So multiple panel regression data employed to examine relationship between firm performance and capital structure across 120 companies from consumer industry, and 600 observed were used in this study. So this method used in this study are descriptive statistic, correlation analysis, pool OLS model, and FE model. So the descriptive statistic and correlation analysis were employed by SPSS system, while pool OLS model and FE model were used by eView system. So the study found that external sources has negative impact on firm performance. In reality, debt financing consists of short-term debts and long-term debts. So this is the hypothesis tested result or findings. Okay, for the hypothesis number one, there is a negative relationship between debt financing and firm performance. The finding is negative, and this is accepted by this hypothesis. So by this study, right? For the hypothesis number 2, it tests there is a positive relationship between equity financing and firm performance. The finding is negative, and we reject this hypothesis. And for the hypothesis number 3, there is a positive relationship between liquidity and firm performance. The finding is negative, and this hypothesis also reject. Okay, hypothesis number 1, the firm performance is predicted to be negative, influenced by the debt financing. So only TQ had significantly and strong negative affected by TD and in FE models. So this evidence is supported by the pecking order theory, which stated that external funding will be increased asymmetrically information between owners and investor. And for the hypothesis number 2, expect that firm with high equity proportion in capital structure has a superior performance and vice versa. So TE had a significant and negative relation with firm performance that measured by TQ input OLS model and FE model. So this result is not supported by signaling theory, which stated that profitable firm use a costly capital structure choice for funding. So for the hypothesis number 3, forecast that liquid firm has a higher corporate performance. Thus, a firm with poor in working capital management may lower its firm performance. So there is a negative and significant relationship between ROE and liquid. For the conclusion and recommendation, the future study is to be suggested to employ these two processes as a capital structure measurement, which is short-term and long-term debts. In the real world, the firm performance may influenced by other financial factors and non-financial factors such as firm industry factor, business risk, market factors, income tax rate, and nominal interest rate. And for the further study may include other factors in the model. Okay, thank you very much, and thank you very much again to the organizer and to all the audience. Thank you.